Currently, U.S. nat gas futures are showing a downward trend due to the influence of weather patterns and fluctuations in demand. Next week, the central United States can expect mild weather conditions, with temperatures varying between the 50s and 80s for most of the country. Overall demand is predicted to remain low until Saturday, with a shift to moderate levels on Sunday and Monday. However, a cold front is expected to move into central and eastern regions by the weekend, leading to higher demand as temperatures drop. Another negative piece of news for natural gas is that feed gas intake at the Freeport LNG plant has fallen by almost half over the last week to 758 million cubic feet on Monday, from 1463 on March 3. In January, each of the 3 trains either tripped or experienced a shutdown at least once, according to company filings with state regulators. Freeport said on Monday it would not comment on the changes in its feed gas usage. The downward pressure on nat gas prices is further reinforced by the anticipation of an upcoming storage report, which is expected to be highly bearish due to a minor build of plus 3 billion cubic feet instead of a withdrawal of minus 87 billion cubic feet. However, market sentiment is likely to shift afterward as the rest of March is forecasted to be colder than normal, leading to larger withdrawals compared to the volumes seen in the 5-year average. Furthermore, if Thursday's storage report reveals a minor withdrawal instead of the anticipated build, it could draw in counter-trend buyers. This may prompt an earlier upward movement, supported by the approaching cold weather, decreasing production, and the upcoming Freeport LNG restart. Otherwise, the bearish trend may persist a bit longer. Early on Tuesday, nat gas is engaged in a two-sided trade as traders appear to be working on establishing a support base within a short-term retracement zone ranging from $1.80 to $1.75. The current pivot stands at $1.80, marking critical market movements. A sustained move above $1.80 will signal the presence of counter-trend buyers who will likely attempt to push the market towards the resistance at the 50-day moving average, currently positioned just above the $2. On the contrary, if the anticipated bearish report materializes, I would expect the bearish trend to persist for a while, followed by an inevitable price reversal, supported by the anticipated further decline in production and increasing gas consumption. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.